Hello and welcome again to the Stocks Advisor channel. Today we will talk about EHang Holdings Limited, traded at Nasdaq, ticker name EH. Well, EH made today 4.49%, finishing 22.57. After hours, we see some slight positivity, being 22.76, so plus 0.84%. And overall, of course, this is quite interesting stock to watch. But at the moment, what we see is actually a major, let's say, a correction taking place from the February, where we went all the way to 125 here, and now we are actually gradually declining. Although for a company, we still need to remember this is a company with sub-billion market capitalization, so it's only 720 million. So in that sense, this is very interesting because these kind of companies can give really big volatility once the rebound takes place. And for that, we need to see at the bigger scale. Actually, from November, we started to grow and went all the way to 125 from the level of about 795. So this is incredible growth, of course, and therefore we also see really long-term correction taking place and going here as a clear channel using moving average 20 as actually let's say a resist level. But what is interesting here, now the channel from the middle started to kind of decelerate, and this is the clear example when let's say a clear indication when the correction might stop and we could go actually to a final rebound, because this is the classical moment when you have a descending channel, and then what happened actually, instead of going further down from the middle, you start flattening. This could be indication of possible rebounds. Also, you can see that moving average 20, if you look now at bigger magnification here, moving average 20 is slightly bending, so it might go higher, but it could be also a false call. Therefore, we need to be prepared to actually buy at let's say at lower levels as well. Therefore, speaking of how to buy, we need to of course to do two things. We cannot lose the opportunity if this is indeed an indication of rebounds, but also we should not be, let's say, betting everything. You should be also able to the price declines. Also, what is important, we are currently trading in this very nice channel that was formed by December action, from December all the way to mid of January, and therefore this would be actually the first buying opportunity. So speaking of how to enter and not losing the possibility of already rebounds, we should enter between 20.59 and 25.10. So this would be the first channel to buy through slowly. Actually, it's already activated channel, so we can start buying there. And before we go, speaking of profit taking, usually we speak about 10 to 15%. Here it's 15 to 20% for short-term traders. For mid-term traders, of course, it could be higher, because this is really the position that might rebound really well. And overall, let's say for those who are midterm traders, the expected trading channel is at least to 50 or higher. But if you are a daily trader or let's say shorter term, of course you just want to take profit in time and don't stay too long. But overall, if you're again midterm trader, let's say the channel that you can expect to return the price to is between 39, let's say, and 50 roughly. So this would be the target channel. So now the primary channel to buy through. Let's write it down again. So this was 20.59 and 25.10. So this is the primary technical where we start buying, hoping for already the rebounds, that this deceleration that we had last days is an indication of rebounds. Also, you can see by after hours move, it's still positive, going almost to 1% now, again to plus 0.84. So it could be indeed that rebounds will take place there. But if not, then we just need to keep some funds to buy lower. That's always what we do. So we need to go to secondary technical pattern, secondary channel. And this one clearly also by the same strategy formed by mid of November, mid of December, previous year price action. And this is therefore 12.47 and 15.09. What is very important to remember about this position, it has enormous volatility potential. So when you trade here, you should be extremely patient and knowing what you do and believing in your way of trading, because Otherwise, those volatilities could really drive you crazy when you see temporarily red numbers at your brokerage account. Therefore, this is the secondary technical pattern. You see it's quite low from the current one, almost 50%. And therefore, when you buy slowly, when you will be, if you choose this way of, let's say, trading, if you like this opinion, then of course you need to be prepared to be really, let's say, brave and emotionally stable, knowing what's happening and what you are doing. So this is the second technical, and after the primary one. And then we always need to keep some funds to mitigate risks if a negative catalyst kicks in. We always do it. In this case, quite rare possibility, but it's always better to have some funds to average down if something bad happens, kind of a doomsday scenario. And for that, we really need to go to principal levels to be able to buy there if the price declines. Not given at all, but if it happens, we need to be ready. And you can clearly see this is the level between 795 and 944. So this would be the final level to buy through, and actually our, let's say, final averaging down to mitigate risks due to negative catalyst. So let's write it down, and this will actually make our levels 795, 944. And with this, we actually now know how to buy here, at which levels. Actually, now the question is how to buy with which portions to be safe, because you see that the distance between the levels is quite high. And as I said, it's a high volatility trade if it starts going down. Therefore, you really need to be knowing what to do and really follow the idea. And here it's still 5 portions classical play, meaning that it's still a classical behavior on a huge volatility though expected. So if happens, and if you like this analysis, the way to trade here would be you need to split your money you would like to play here in 5 portions. Then you can buy with 1 portion through the first channel. So currently in the current channel, you can buy with 1 portion. If this primary technical pattern is not forming, and then we go again to decelerate to the secondary one, then you can buy with another 2 portions through the second channel between 1247 and 1509. And then if any negative catalyst kicks in, and so we don't start rebouncing there, while people will be exiting with numbers, you can just buy with the remaining 2 portions at the last level and then prepare to rebound, making your profit 15 to 20% from all money allocated into this position. So this is quite nice trade here, very nice position to watch, because it's really showing indications of, let's say, finishing the correction. And what is really nice in this way of trading, at least to our opinion, that's what we follow. We don't discuss stop loss, so we don't accept any losses. We just trade optimizing to having the profit all the time, although it might take a little bit longer time. So this is a conscious optimization for money and profit, let's say, rather than a loss and speed. Because if you do the stop loss trading, you usually bet for speed, but you again pay by your money, so you pay by your stop loss for the speed. And here we don't pay for the speed, we pay for profit with time. So we are okay to wait a little bit longer, but we still exit with a profit. This is more like a trading on daily candles, so you don't need to sit at your PC all the time and watch what's happening with your position. You only need to know the principal levels that we have discussed here, and then you know what's happening and how to trade. So with this being said, this is all for EH at the moment. If you like this style analysis and you like this opinion video and you want to see more, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US buy stocks.